Why are uranium stocks absolutely melting down? We covered it in last week's video. This is just a continuation. Now, obviously, they could have rebounded by the time you watch this video, but we know kind of directionally why they're doing what they are doing. So let's dive into brand new updates and see what's next for these assets. As of March 4th, 2025, here is the year-to-date chart of the Sprott Uranium Miners ETF, down 19%, just melting down and declining even further the last few days. But what are other assets doing? Is there anywhere else to hide? Well, the Russell 2000 index also melting down 6% year-to-date, and recently giving up all its gains and crashing. The NASDAQ Composite. You think you can hide in big cap tech? Unfortunately, you can't. It's also melting down. So uranium stocks are melting down for the exact same reason almost every other asset on the planet is melting down recently. It's not just your uranium miners. People always make the mistake at looking at their portfolio and questioning, why are my stocks down? What is wrong with them? Nothing's wrong with them. The entire financial system is melting down. So to understand why your stocks are melting down, you have to look at what's going on with the entire financial system. The move has nothing to do with the quality of your assets. Now, if you're in earlier stage assets, of course, they're going to melt down further. They're less known, there's less liquidity, and there's no floor. If you've been investing for a long time, you've been in markets like the 2008 financial crisis or 2020, there was no floor. Assets just fell and fell and fell and fell until markets recovered, and then they rose and rose and rose and rose. So this is just the nature of financial markets. There's no bottom. That's very scary for people. But there's also no ceiling depending on what you're buying. So why are these assets melting down? Again, we covered it last week, but here's just a glimpse into the environment we are in. This is from October 29, 2024. We have Elon Musk, Trump allies, saying his tariff plans could cause short-term pain for consumers. So they're predicting short-term pain for the United States economy, right? So they're expecting some pain. And lo and behold, here's the pain. Dow tumbles 650 points as Trump confirms tariffs on Mexico and Canada will start Tuesday. So we're experiencing what the current administration has kind of been expecting all along. And we covered in last week's video how they're highly incentivized to inflict as much short-term pain as possible, because that's going to mean a massive bull run going forward. They want all the bad stuff out of the way. It's like tearing off a Band-Aid, because they're going to want a massive bull run heading into the midterm elections, right? They're so incentivized to make this happen. Again, we also covered why short-term pain and a crash in financial markets is very good for the government. And so why is that? Because a crash in financial markets means a crash in interest rates. Here is the chart over the last month of the 10-year bond yield. It went from 4.6, now it's at 4.2. So what does that mean? That means interest rates are falling. That's what happens when we get a market correction. Interest rates fall. Bonds are a flight to safety. The value of cash goes up. The value of fixed income instruments go up. So when this interest rate falls, it means mortgage interest rates are falling. It means the net present value of uranium miners goes up because debt costs go down. So interest rates are the oxygen of the financial system. What does the U.S. government want more than anything? They want to be able to lower interest rates whenever they want to stimulate the economy. But if interest rates are sticky high, they lose that power. This is Donald Trump and his big speech to Congress very, very recently on March 4th.
We will defeat inflation, bring down mortgage rates, and today interest rates took a beautiful drop, big, beautiful drop. It's about time.
They're focused on the 10-year bond yield. That's why I'm focused on the 10-year bond yield. That's why anyone who understands financial markets has to be focused on interest rates, because they are the oxygen of the financial system, right? That's why the government, the highest levels of government, are focused on what the 10-year bond is doing. The only way to get that sucker down is to have a massive meltdown in financial assets. That is what we are seeing. So again, that is very short term. We've seen this playbook before. Markets crash, interest rates crash. The Fed comes out and says, oh, let's lower interest rates to zero because the market is already accepting lower interest rates. So now the Fed can say, we're going to lower interest rates to zero. Now the economy can be stimulated because the cost of capital is tiny. So first we get massive short-term pain And then we get a massive bull market, but we need that short-term pain, right? So that's just short-term price action. What about long-term fundamentals? At the end of the day, if we want life-changing returns for the long term, we need good long-term fundamentals. So with regards to uranium, we need good supply-demand fundamentals, like every commodity. The less supply and the more demand, the more massive upside for these assets, especially when we get favorable financial conditions. So again, just to reiterate, short-term pain, massive meltdown, followed by government stimulus, followed by a massive bull market. So patience is key, and understanding the cycle is absolutely key. But now let's move on to the long-term fundamentals. According to Kazatomprom's latest SUA proposal, production from Kazakhstan will be less in 2032 than it is today. The decline from there is shocking, right? It just plummets off a cliff according to this chart. So that's supply dwindling. In previous videos, I've shown you how demand is skyrocketing. And in last week's video, I showed you how the uncovered demand is also skyrocketing over the next few years. So we are in a multi-decade supply crunch for uranium, and we're just getting started. Here's the chart I showed you last week showing how 2025 is the very beginning of a massive supply demand shock. These are uncovered requirements showing how going forward, utilities are going to need to cover their uranium requirements by buying above ground uranium. For a long-term play, it doesn't get better than that when investing in a commodity. MERTs, it is necessary to reach a moratorium on dismantling nuclear power plants. In a live national press conference minutes ago, incoming German Chancellor Friedrich Merz called for a nuclear dismantling moratorium. We covered last week how the new German government is pro-nuclear. The German government for the last few decades has been massively anti-nuclear. This is another sign of how the dominoes just continue to fall around the world and these big, important countries dive into nuclear. And at the same time, we have a brand new industry being formed around nuclear, which is set to massively accelerate the demand for nuclear. World-leading nuclear steam turbine tech to bolster Rolls-Royce Gen 3 small modular reactors. Siemens Energy, a massive company, brings decades of experience in conventional equipment. So we have the biggest companies on the planet building small modular reactors that can be shipped anywhere and power anything. And this is a multi-billion-dollar future industry that hasn't even launched yet. So very good for Rolls-Royce. There's a lot of competition among these small modular reactors. Very good that they're getting support from a massive company, Siemens Energy, creating some of the best small modular reactor tech on the planet. Italy takes first step towards return to nuclear generation. Italy's cabinet, after a decades-long ban, today, Italy's cabinet approved new legislation that will lift the prohibition on nuclear generation. So just like Germany, Italy diving into this space. Nuclear energy is the fuel that's going to power everything one day, and we're entering a period of constrained supply and exploding demand, staying on top of this space.